We're going to begin at 5:30 with a decision that impacts every single American. The Federal Reserve makes the call to cut rates. Tonight, we're going to go step by step to show you what it really means for folks working to make ends meet. Good evening. Okay, so let's start with the basics. The Fed cut its prime rate by 1/4 of a percentage point, and while that number may seem small, it really does have a wide-ranging impact.
Yeah, so this is what it means. We're talking about things like mortgage rates and auto loans. Those are all going to get cheaper for you. It's also a sign inflation continues to cool off. Now here's Federal Reserve Chair Jay Powell explaining why the board made this decision.
Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October.
All right, joining us here on set is Dewey Steffen with Great Lakes Wealth. So, Dewey, right off the bat, talk to us about the impact this will have and how soon could we all see it?
Well, we're seeing it already, and we're going to continue to see it. The movement today by the Federal Reserve to lower rates 1/4 point was the second reduction so far this year. They did it in their previous meeting. We think they'll do it in their next meeting, and we'll see what happens next year. But we're on our way, and we're just getting started.
All right, so help make this plain for folks at home and for people like you and me. What's it actually going to mean? Are we going to see a significant reduction in interest rates when it comes to things that we may be looking for but just couldn't attain yet because interest rates are so high? Homes, auto, anything else?
You hit the nail right on the head. It is going to be homes and mortgages. It will be auto loans. It will be your credit card debt. So we have seen it come down already in the last 30 to 60 days, but in the last week or two, we've actually seen rates go back up. So as a consumer, you need to pay attention, and you'll see the trend be lower, but it will be up and down along the way.
Does this mean that folks who have been interested in cars or homes should jump and look at them right now, or just wait a little bit?
No, you need to jump and look at them right now, absolutely. But do your research, compare rates, and if you're in an emergency, you have to handle your business. But you can also wait because probably in the first of the year and into the first quarter next year, you'll see rates come down even further.
All right, so I saw that the interest rate range lowering to 4.25 to 4.50 or so. A few years ago, we saw things down by about 3%. Are we on track to see anything moving down like that, in your opinion?
So today they reduced it to 4.5 to 4.75. But yes, their indications are they will lower them further, maybe up to another point lower when it's all said and done. So that would be the 3.5 to 3.75 range. But you're not going to see the mortgage rates go that low anytime soon. All
right, so again, we've been talking about high inflation, and people have been talking about grocery stores. That was one of the things that took them to the polls this election. Are we going to see those kind of drops in groceries and things that we use every day?
Well, what the Federal Reserve said today is that inflation is under control. It's under 3%, and inflation is not the problem. They said that a dual mandate and with unemployment, that still may be a problem. So they're managing that and looking at that. With the election results that happened the other day, the new president-elect Donald Trump, we expect there'll be tax reform. We expect there'll be other mandates that he will work through that could cause inflation to come back up. So there's a story for another day.
All right, Dewey, we'll wait another day for that story, but for now, any final advice to our viewers at home looking at this and trying to process what this should mean to them and how they should move in the near future?
Yeah, we say don't panic, be patient. And sometimes that's when things are bad, but when things are good, like interest rates coming down, that's a good thing. But whether it's your current mortgage, you're looking to refinance or get a new purchase of a vehicle or whatever it is, don't panic. Be patient, but do your work, and you'll be good served.
And we'll be waiting and watching to see how this all plays out. Dewey Steffen, always a pleasure to have you here with us and giving us some context and perspective. We appreciate you.
Absolutely, my pleasure. Thank you.
Karen, I'm going to send things back over to you.